Hello friends, for today's Bitcoin analysis, the technical factors are showing a mixed picture, but it merely means a pause within the downtrend rather than an outright neutral view. So let me break it down for you and let you know how I come to my conclusion. So the first thing you see is the market is currently testing the downtrend line. So this is a gray area where we're not too sure if the bears are still committed to the downtrend. So we need other tools for us to help to determine the bias. But from this chart, you can see that the market structure is a bearish impulsive wave, and currently the Elliott wave 4 within this entire wave is active. So since the Elliott wave 4s are characterized by having a sideways nature, so we can determine that the market is likely to continue to move sideways until the low of the wave 3 is taken out. Well, the tools are also showing more of a mixed picture. So the stochastics is in the boundary within the lower and upper limit, and although the MACD is in positive territory, if you look to the left and see what the market with momentum, bullish momentum is like, you can see that every bar is increasing, but from the current MACD in positive zone, it has dipped a little before recovering. So it's not as bullish over here. So with these factors combined, I came to a conclusion that it is paused within the downtrend. And what that means is that it is likely that prices will move within the range of 17,140 and 16,880. But the eventual bias is still a downward move. So first of all, I'll go through that scenario. So if the bears make the first move within the bearish Elliott wave structure, we can see that the bears must break below 16,880, which is the low of wave 3, to validate a move down to wave 5, which is the target at 16,770. So this level, how do you derive it, is to use the projection tool. And you take the length of wave 1 to wave 4. You can see this is the 61.8 Fibonacci extension. And also, if you look to the left, it was also respected as a support in the past. But if the bulls take the initiative to go higher, we can see the bulls will charge for the level at 17,140. Okay, so this measurement is taken from the retracement of the wave 4. So it is the extended target of the wave 4, which is the 50% level. And also, if I do a one-time projection with for the internal wave, so you can see that the one time lies at 140. So this confluence gives us the level to look out for the bears to break if they want to see a higher move to 17,290. And for your information, 17,290 is the wave 1 overlap resistance. If the bears can move higher than 17,290, so this entire bearish Elliott wave structure will be invalidated. Okay, so this is the overview of the technical analysis. So just to sum up, I'm expecting a pause before the market moves lower, and to get that confirmation, I want to see a break below 16,880 to validate a wave 5 move to 16,770. All right, guys, see you tomorrow then.